Excellent. He has experience and education in Islamic financial services, Islamic bank, Takaful, and capital markets. He possesses wealth and valuable and demonstrable experience in Sharia compliance aspects in the fields of Islamic finance. He's an expert in Islamic digital fields such as Islamic fintech. I heard about this when I was reading about your profile. Islamic invest technology. Did you all know that? No, they're all surprised. Islamic blockchain. Excellent. Not the normal blockchain, but blockchain with Islamic blockchain. He's well respected for connecting with stakeholders from all professional levels, identifying untapped opportunities, and delivering innovative solutions. He holds a Master of Islamic Banking and Finance, Bachelor of Sharia Laws, and Bachelor of Commerce Finance option. Welcome, Mohammed. Thank you very much. And then I'm going to ask Mr. George M. Kiruthu, Head of Financial Crime Compliance, ABSA PLC. Na kama mko na malilio yote ya ABSA, this is the time he's going to take them for us. Mr. Kiruthu, he serves as the Vice President of Compliance and Head of Financial Crime Compliance at ABSA Bank PLC. He has over 12 years experience in financial crime compliance, risk management, and governance, and he specializes in anti-money laundering, anti-corruption, and bribery risk management. I cannot wait to hear what George is going to talk to us about, because we know the things that happen within the banks. And he leads the financial crime compliance strategy, ensuring adherence to local and global regulations, while overseeing anti-bribery, anti-corruption, and whistleblowing frameworks. And we've seen most of the time in many organizations, that's a challenge. He's known for pioneering data-driven compliance solutions. He has built and mentored high-performing teams and fostering strong relationships with regulators and law enforcement. He's a passionate advocate for governance reforms. George champions private sector collaboration to enhance integrity and transparency across the industry. Let's welcome George. Makofi, tumekula. And the next one to join us is there's someone who is not here, so we will continue. So George and Mohammed, talk to us. Do we have another mic? Okay. And just a quick one, before I get to the questions, I'd like to know what drove you to make sure whatever you do, all for your organizations, has ethics embedded and integrity embedded in it. Just tell us a little bit about that before we delve into the questions.
Thanks so much, Madam Catherine, for this opportunity. In fact, when we talk about Takaful, it's one of the division of Islamic finance. We have Islamic banks, Islamic capital market, and also Takaful. So Takaful is based on the Sharia principles. In fact, all the Sharia principles are found from the Holy Quran, as well as the tradition of Prophet Muhammad sallallahu alaihi wasallam. So these are the core source of Sharia principles. So when it comes to how we implement ethics, obvious ethics is based on the Holy Quran, because there are many verses about how we should deal, we should operate as takaful. For example, there's one verse we talk about, prohibition of corruption, where Allah says that do not distract honor. This is very clear about how we should operate. We should not cause distraction on earth in different ways. So God Almighty has prohibited creating distraction. One of the distraction is corruption. So the way we should work or we should operate, it must be in line with the Sharia procedure. Let me give an example of how we try to avoid the destruction. We don't underwrite any company that deal with chemicals production because it destructs the earth. It creates, it destroys environment. So we don't offer cover to those kind of company. So our own operations are based on Sharia principles, which are governed by Sharia governance. On the Sharia governance, we have special scholars who guide the takaful operators. Yeah, this is just a nutshell of how we are governed. Yeah.
Excellent.
Thank you, my fellow panelists. Good afternoon. So my name is George Kerufu, work at ABEC Bank in financial crime compliance. I think mine is borrowed largely from my first, just off a campus. The first company I worked for was performing very well. Then for reasons, because of lack of governance, and this will talk about ethics, the company went to the ground. And I then saw that because I lost my job, that I had to pursue a career within risk advisory, within the ethics space, so that appropriate or proper governance or wherever I work, I'm able to reject those practices at work. Now, just as my fellow panelists have stated, some of these are also inborn, that some of us are Christians, we have very similar similarities from how we've been brought up, that if you don't do ethical things, they'll come a bit. Therefore, they'll come back to you. In addition to that, and this is borrowed largely from what I do and what I've done progressively, is that you find that we lose a lot from a social perspective. The impact always in ethical conduct across, whether it's within the academia, financial sector, in public governance, at home. You can imagine where the impact from a society perspective, it's significant, it's very material, and impacts a lot of people, and hence the reason why I'm a practitioner in that space, or in this space.
Excellent. Can you hear me? Excellent. So you can just keep the mic. I think I've eaten, so I have... okay. So while you still have the mic, maybe, George, you can tell us how ABEC Bank addresses, all these issues on financial crime risks. We've seen with many banks lately, just the other day we saw that a manager at NCBA, I don't know if NCBA is here, in Kisumu, 47 million. How did he do that undetected?
Thanks. It's a very good question. And I don't want to speak about competitors.
Yes,
so speak about what we do at ABEC.
Exactly.
First and foremost is that one of the biggest problems that we have, not just across any industry, is lack of governance. So for any entity, particularly within financial sector, because the issue of money is about trust. When you come to a bank, the first thing that you think about is, I trust this institution to ensure that my money is properly protected, that if I need to use that money tomorrow, if I need to pay school fees, if I need to pay rent, if I need to pay for medicine or for healthcare, that money is available. So it is born on trust. And that's why we have a license and we are regulated. Now, one of the key pillars is basically, and it's coupled with is a strategic approach, is where you find that you need to combine basically processes, people, and technology, so that you're able to actually mitigate or prevent financial crime. When we talk about financial crime, it cuts across fraud, talks about bribery, talks about corruption, talks about money laundering, because the onset of those first crimes, cyber crime, fraud, and the others, normally known as predicate offenses. And they're the ones that are the larger component of money laundering, terrorist financing, or proliferation financing. Now, one of the strategic pillars is ensuring that you have strong governance. And strong governance is made of having the right, you have a board. The board speaks, there's a tone from the top in terms of what they cascade down. There's a KPI for each and every employee. They create structures, which includes compliance, internal audit, other risk functions, and the business. And there is a separation of duties that for you, you're supposed to have policies or procedures that govern each and every aspect. For instance, within the space of bribery and corruption, the key or the very vital components include how you bring in customers on board, right? It starts from the people who are front facing, in this case, the tellers, the people who go, we call them the relationship manager or the salespeople within the banking space. Do they understand the language, the principles, the amount of information they're supposed to ask customers, as well as obtain, and the message that they're supposed to tell customers in terms of the product that we sell? Because about providing the right information, getting enough information, in this case form of know your customer, which is then used in the banking systems and records to ensure that we understand our customers, and that's a big requirement. Additionally, the bank is supposed to invest in education and awareness. For instance, if we are dealing with third parties, and who are the people that we call third parties? These are people who supply services to the bank, for instance. It could be vendors, suppliers, or it could be partners. For instance, a bank might not have capability to sort of roll out a certain financial technology software, and therefore, and in this case, and if forgive me, I'll mention M-Pesa. So you partner with M-Pesa, but that kind of relationship requires, in this case, if you were to take another company X, then it requires that when you bring them on board to partner with a bank, in this case, if it's a bank, that you've done appropriate due diligence to ensure that you are dealing with the right people. There is no exchange of, or there is no influence, there is no solicitation, and you have policies and procedures that govern how we interact with them, how we compensate them, starting from third parties, suppliers, colleagues, or when I'm talking about colleagues, I'm talking about staff members, so that undue influence elements or the potential risk of undue influence is mitigated. So, first point, strong governance, policies and procedures, having an AML framework that talks about anti-bribery and an AML framework. When I talk about AML, I'm talking about anti-money laundering. And I mentioned the nexus. Then the other one would be ensuring that you have the systems to arrest or to actually deter, and also to actually detect and also manage. For instance, you should have a system that talks about, for example, if it's onboarding, and you talked about bringing customers on board, do you have the right system that will say, I'm going to screen an ID, I'm going to screen a passport, I'm going to obtain an additional document to ensure that the person I brought on board is not a corrupt person. And there's a requirement in law that talks about people who basically naturally control public funds. For instance, and we call them politically exposed persons. These are politicians. It could be high-ranking officials in the government. It could be senior commissioners at ABEC, within the judiciary, members of parliament, MCAs, that you carry out extra due diligence to ensure that you understand what they do, their sources of funds. If it's in the industry, for instance, and I'll reference to what my fellow panelists talked about in terms of doing businesses that might not be appropriate. For instance, you note that the people living near ranches or near the game reserves, there are risks such as poaching, right? Do we understand, do you have a risk assessment to ensure that if I'm actually opening an account for someone who resides or who is employed as a warden or a senior game official, the sources of funds, the money they earn, so that the potential risk of bribery or corruption is mitigated. And finally, there's basically the systems for reporting. And they are quite a number. They're the ones for reporting to ensure that you meet what you call regulatory obligations, and also to ensure that internally, from an assurance perspective, that you're able to keep in check on type of accounts that you open. In this case, it enables you to do scoring, depending on how a person behaves, depending on the nature of business or the nature of occupation. I talked about politicians. I talked about people who sit in high-risk industries. It could be within, say, for example, scrap metal. That becomes a high-risk business. Someone who is in the mining business, that also becomes a risky business because potential risk of smuggling. There's conflict involved. There's potentially theft. So these are some elements you look into, and you need to report them if and when they apply. And finally, empowering and enabling colleagues to report on either unusual activities, either through whistleblowing platforms or having other systems where they can feel without fear of retaliation. They're able to actually pass on information to people who can actually be able to act on it. So in a nutshell, those are some of the areas where, from an ABSA perspective, is that we basically have put in a strong framework to ensure that from an accountable financial institution, we're able to prevent, we're able to risk assess, and also deter and help the public at large. And I think I also should probably point in, and I think this came up during the discussion between the panelists who were there at the forum, is the issue of an industry framework. From a banking sector perspective, we do have a code of conduct, and this is through the association, which is the Kenya Bank Association, where you sign up to a certain conduct code. One of them is that we exchange information about, for instance, if there are leavers who committed fraud at one institution, that information we pass it to the other people within capital or within the people sector to ensure that these people are not onboarded within the banking sector, because they commit fraud from one institution, they go to the next one and commit fraud. And the person who will suffer at the end of it is the person who is a consumer, in this case, a customer to the bank. And therefore, it basically benefits the society at large. Thank you.
Wow. Thank you for that. And I will have an opportunity to ask you questions with that. But it's very impressive what ABSA has been able to do. So a clap for him, by the way. He's told us quite a lot. People, processes, systems, some of the key things that we sometimes overlook. You could have a good system, but processes are not aligned. You could have good processes, but the people are also not empowered, So it's good to hear what ABSA has been able to do. I move to you, Mohammed, so you can tell us how Takaful Insurance is integrating Sharia compliance principles with broader anti-corruption and ethics frameworks.
Thanks so much. I think before I answer this question, let me just describe what Takaful. I know many of us don't understand what is Takaful, how it operates, so that we have an overview about Takaful. Simply, Takaful is a Sharia compliant form of insurance based on mutual cooperation and collective responsibility. How, for example, let's say if you come for Takaful cover and you pay the contribution. Contribution in conventional, it is called premium. So you are considered as participant, meaning you'll be part of the pool of the members who own the pool. So your money is divided into two. Portion will go to Takaful operator's account, and the other one will be placed in a participant risk fund. Each two funds segregated has different liabilities, always has a responsibility. For the operator's fund, the money will be used for management expenses, such as, let's say, utilities, pay of salaries, and many other expenses that incurred by operator. While the fund which is in the risk fund, in the pool, is used to cater for any expenses incurred for or by the participant. Let's say in case of a claim, the money now in the pool will be used to compensate the participant. Now come to the question, how we implement or we avoid money laundering as well as corruption. Look at the model, how we operate. I mentioned earlier that in my description is that Takaful is a hybrid model contract and a combining of more than one contract. The first contract is Wakala or agency contract. The other one is Mudaraba. And Wakala means when the participant now pay the contribution, there's an agreement which enters, which is stipulated clearly in the policy document that participant appoint Takaful operator to manage the fund on his behalf. So it means that when you're appointed as an agent, obviously you are entitled to receive a portion, or call it fee. So in that contribution paid by the participant, that's why it is split into two. So portion goes to Takaful operator. And the percentage which is now charged, it is clearly stipulated in the policy document so that you know how your money is channeled, how your money is treated. Then when it comes also to how the compensation claims is made, it's also stipulated in the policy. In fact, when I joined Takaful, there were some gaps in our policy, so I had to review those policies to incorporate Sharia principles so that when we share our policy with the participant, they read and understand and see the difference between Takaful and conventional insurance. This is number one, so that we want to create that transparency, so that we understand. In addition to that, when it comes to how we onboard the participants, we have to inform, as my colleagues say, we have also to inform the customer the best cover to be issued or to be taken by the participant, not just to have to meet our target. We have to ensure that the cover that the participant is given is appropriate, is the correct cover, because at the end of the day we want to assist, we want to create that peace of mind. That's why we have to inform, we have to educate, we have also to inform the rate which we are going to charge for the value, or for if it is a motor vehicle, as per the value, and so on and so forth. So everything is clearly mentioned in the policy, and also educated or inform the participant to understand which cover best or suit for him. That's number one. Number two, when it comes to ethical operation, how we operate. I know this is a very critical area. As I mentioned, the segregation of fund, how we divide the fund to ensure separate obligation among these funds. Also look at the how we choose the business, or where we invest first, where we invest. Obviously, since we are Sharia compliant, we don't invest in any business, either being call it halal, interest-based, involved of gambling, pornography, and so on and so forth. No, we avoid such kind of business because it is not in conformity with the Sharia principle. That's number one. So we have to ensure that we have a business that in line with the Sharia principle, so that the return which we get from the investment is also shared back to the participant, because we apply call it profit and loss sharing contract, which is mudaraba. Our participants are the fund provider, while we as Takaful operators, we are the entrepreneurs who invest that money on behalf of our participants. So we have to ensure that even the return which we are giving, it should be halal, so that we give that ethical return to the participant. Comes to also giving example of how sometimes even we lose a business because we fail or we refuse to pay a bribe or to corrupt. And we know very well that sometimes we may apply for a tender, let's say for county government, for medical tender, worth let's say 300 million, 200 million. But you know how they operate, these people. Before you talk, Ilechai, that first tea, say keep on the table 202 million cash. That's just for them to listen to you. Who are you? Once you accept that, now it goes on until now you're sure that you are going to win this tender. How much are you going to pay? Say 10% of their value. So means if it is 300 million, you're going to pay 30 million. And they need in cash, and Probox is waiting for you. Our Probox is waiting for you to receive that cash. But once you refuse or you fail to pay that amount of money, that tender will go to another competitor who accepted their request, and at the end of the day, you'll be given a regret letter stating that we are very sorry that you have not won the tender because you are not licensed as underwriter. Yet we have the license as underwriter. You see, this kind of corruption which is available in the market, but we try to avoid. So mostly our small tender is below 5 million, which we can communicate to the people and they understand how the value we are going to add on their customer or on their employees when they have our medical cover. So another challenge, another area we try to avoid corruption as well as anti-money laundering, as we say that on top of one of the regulator, which is IRA, we have another layer of regulator, which is Sharia board member. Sharia board members, for us, we have 3 scholars who are well educated in Islamic finance. Their big role is to advise Sharia, to advise the company, to give best resolution, and to ensure that every operation or every activity done by Takaful operator is approved by the Sharia board. So we have that responsibility to ensure that any request is referred to the Sharia board as Sharia department and ensure that it is approved. In fact, sometimes, you know, in Takaful, we don't give out gratia, ex gratia. I know in convention they give ex gratia. Why we don't give ex gratia? Because you know that the fund which is in the risk fund belongs to all the participants. So when we give ex gratia means you are eligible to receive compensation because you don't qualify since you have not met all the conditions required. So sometimes now you find a customer comes say, you know, I give you many business, I support you, so please consider our request, our claim. You get it? Yet it is unpayable. We cannot pay it. So what we do is say, let's now place the responsibility to the Sharia board. They will approve and take the responsibility because now they are the one who will be answerable before the God. You get it? So how seriously is this issue we're trying to avoid? And lastly, when it comes to the social responsibility, this key element here is that I know very well, we try to manage the fund very well. And we ensure that it have that underwriting profit. For us, we call it surplus. Because, you know, surplus is only based on the risk fund. The money belongs to the participant. So in order to have that fairness, the money at the end of the financial year, after calculation all the expenses, what is remaining, we return that money to the pool. We keep it in the pool. We don't take as Takaful because that money doesn't belong to us. We have already taken our portion, which is agency fee. So the money which is in the pool is remain in the pool and it is shared among the participants. But how it's shared? It is shared to every participant? No. Only those participants who have not claimed are eligible to receive surplus. We want to create fairness. You can't have claim as well as surplus. So if you have claim, you are well taken off. But for those who have not claimed, we are giving something prorated amount of surplus to appreciate and also to know that Takaful cares and also have that ethical aspect in it. Thanks.
Excellent. It's okay. I think I wouldn't use the mic. Thank you very, very much. That's very deep. And I'm sure people have the same questions that I want to ask him. Can I take that insurance? Am I Sharia compliant?
Okay, I forgot to mention, that's a good question, really. Islamic finance, either being a bank or Takaful or capital market product, it's not only for Muslims. It is for all. Being a Muslim or non-Muslim. Because what we are looking is ethical service, ethical product. So we don't distinguish. if you're between Muslim and Muslim, we serve everybody. We cater for everybody. In fact, for organization Takaful, Insurance of Africa, I can attest that we have more non-Muslim participants or customers than Muslims. So you see how we care about the service. We want to offer ethical services and product to the market without looking at your religion or whatever. What you want it is, you want to have peace of mind at the end of the day if you have a claim. So you are welcome to everybody, being a Muslim or non-Muslim, to our product as well as services.
Oh, thank you very much. So we know where our money is safe. I'm not saying that my money is not safe at ABSA. In fact, it has been very safe at ABSA for the last 30 years. So just moving on, I'll get back to you. I would want to ask you, George, what role does technology play to enhance, compliance and diligence for financial institutions?
So thanks, Catherine. I think technology for me, and I'll give the example of working at ABSA, is that it's a key. Today you can't work without technology. That's number one. That's confirmation that it plays a very critical role in terms of all the aspects, starting from how you bring customers on board, how you manage the processes within the bank. And I think I mentioned, starting from the framework, when you talk about strong governance requires technology, resources, and people. Now, those are critical. And in as much as we would like to, employ as many people as possible, times have come upon us where we need to reduce the number of humans who actually, should do some aspect of work. And I'll give you an example. When it comes to, if you note that we used to take a very long time to open an account. If you go back 20, 30 years, it will take you a whole week to open an account, right? The systems will take very long. Today, you walk into a bank, you walk into ABSA today, within a few minutes, you will come out with an account. It is because we're using technology, which are required in law to first do screening. And the reason why we do screening is to ensure that we do not have unwanted or people who otherwise we might not have an appetite from a regulatory perspective. And this is known as the sanctions list. This stems from the various lists that happen across the world, for instance, terrorism and a few others. The other one is because you just want to make sure that you have the risk profile of the people that you're onboarding. I talked about the different categories or different categories of people. People, for example, students, are people who is maybe an employee somewhere, are people who is doing business, a person who is a farmer, or a business that is probably involved either in the world of trafficking or is actually used in manufacturing, meaning they're doing a good business for the community. So there must be a differentiator. And this comes from an automatic perspective to discover and understand this kind of people. Third is also about the data. Today, data privacy regulations is one of the other critical requirements in that data is money. Data is money. If you lose your data today, right, then if it gets in the wrong hands, you can lose so much. It becomes a repetition risk. You can actually lose your identity today. You can lose everything that you have because someone has your ID or has your credentials, because they can access your bank account, they can access your details from the lands registry, and a few others. Meaning, we have, as a bank, we are required to ensure that you have systems that actually protect that information. So, number one is about onboarding, digital verification of customers, as well as maintaining that information. Number two is about the other aspect about data, storage, because this talks about longevity. There's a requirement in law to ensure that customer records are kept for minimum of 7 years. And that, I think, cuts across the entire African landscape. Even speaking to regions such as Asia, Europe, and the US, most of the regions, the minimum number of years for record management is 5 years. Third, we also have an increase, and the reason why technology is critical is that because of the change in how we do things, you require information in a very prompt manner. And therefore, there's a need of combining just rudimentary technology, in this case, what we have as core banking systems, with other aspects of quicker, agile systems, such as AI, artificial intelligence, could also be blockchain for the purposes of ensuring that you're able to mine data quickly. For instance, today you find that, and I was speaking to what Mohammed just spoke about in terms of giving customers value for money. You find that for us to actually differentiate different types of customers, we need to understand how they bank, how they behave, and be able to then push products or sell to them products that are appropriate for them from either a lifestyle perspective or from a needs perspective. One person could be a parent, another one could be a pensioner, another one could be a person who is actually wants to actually become a wealth manager. And therefore, you need to have a way of differentiating all the customers. How do you do that? By understanding data or metrics with respect to how they transact. And that can only happen through data science, artificial intelligence, modeling. Then, because of the number of other things that you require, for instance, there's the regulators, on the other hand. They are required to make informed decisions about an economy in terms of, for example, maybe changing the base rate, lending base rate. How do they do that? They were only able to do that through the information that comes from a financial institution like ABSA and others. And the only medium to do that is by sharing data. So technology becomes a very critical component of how we exchange information with the regulators. It could be for the purposes of how the economy is performing. It could be for the purposes of making sure that they're able to align, for example, how the exchange rate is happening. You may have noted last year, the better part of last year and bits of this year, there was an issue around the foreign exchange. Now, the central bank had intervened, and this intervention came as a result of the data that it consumes from how consumers are interacting with the banks and how banks are then able to see that information to the regulators. And that can only be done by the insights coming from data. And this, they have to use a certain technological platform. The other aspect is from a money laundering perspective, money laundering, terrorism financing perspective. Is there certain information that confidentially is supposed to show regulators? That needs to be confidential. It's very strict. It can only be done using technology, because if you do it manually, the risk of that information getting into the wrong hands, it can be very sensitive. It can be very damaging. It can be very expensive for not just for the institution, not just for the state, for ABSA, for instance, but for a lot of other people along that chain. And also, in the same breath, you're also looking at ensuring that from a cybercrime perspective, and I talked about things like identity theft, you're able to mitigate such crimes, because the moment data falls into, you can imagine 10,000, and I'm sure some of you could have been impacted at one point or the other, is that if you lose, say for example, 1,000 cards, information about 1,000 customers, the impact, these people potentially shop at Carrefour or Naivas. They potentially they take their kids to the university at KCA or Kenyatta University or Nairobi University. They probably have medical records at Aga Khan or Episha or Nairobi Hospital. They probably have investments. They probably have credit cards and debit cards. So if that kind of information gets in the wrong hands, the repercussions are quite dire. And therefore, for us to protect this kind of information in a manner that is, one, has governance, is responsible, is appropriate, it can only be done through having sufficient technology to oversee cyber controls. And again, that will only happen by making sure you have a proper cyber infrastructure. And finally, I'll talk about the aspect of cloud computing. You know that most of us today are consumers of service from Google, Apple, Facebook, Space, Netflix. All that is because of the scalability, and that is the same thing that even from a banking perspective, you find that different banks, because ABSA Kenya is part of a group, there are some services we consume and they are cheaper. And we pass on a cheaper cost to the customer because we consume, because you have what you call numbers, because you're a bigger group, we're able to buy some softwares cheaply because you're consuming as a group. The moment you're a smaller bank and you have to consume some of these services, then it becomes expensive, and that means you may have to pass that cost to the consumer, and that's where now that sort of the importance of certain technology like cloud computing comes in. So in a nutshell, in summary, those are some of the areas where technology plays a very vital role in how a bank operates.
Oh, excellent. Thank you, George. And now to my final question to you, Mohammed. If you can just take us through some of the unique challenges that the insurance sector is facing, in promoting, especially on transparency, not just in Kenya, but I'm sure you have clients in Africa.
Yeah, thanks so much for this question. In fact, this is not only for insurance or conversion, even on the takaful aspect. Number one is the regulations.
Right.
You find that the regulations which are in place currently are not answering to those critical questions. They are not solving those problems. So you find that we have most of the country in Africa, let's say, have parallel regulations. Means maybe they have specific regulations for conventional financial institutions and also for Islamic financial institutions. But like in Kenya, even for the conventional aspect, the regulations are still wanting. There are some aspects which they need to relook, they need to review to be in line with the modern technology as well as this contemporary aspect in the industry. Come to takaful, we have our regulations, but it's still a draft, not even presented before the parliament for them to look and even approve to form as an act. So that's some of the challenges. Because of that, our Sharia board, our Sharia governors are trying to come out with some parameters to ensure that we are transparent, we comply with all the mandatory act as well as to avoid corruption. That's number one. Number two, another challenge which we are having is about the fraudulent claim. My friend has mentioned about data analytic. It's also critical for insurance industry, because come to analyzing the behavior or the data of the participant or the policyholder. The data will give you information about if this participant or this space is loss-making. So obvious, for the loss-making business, you have two options. One, either to drop it and forget about it, or two, to review your rate upward so that now you can charge more. The more that higher rate, it can, not all, it can somehow assist you to recover the loss which you're going to have. Another aspect is the awareness. I know many people don't understand about insurance. Even takaful. The takaful for takaful is even worse because it's a new way of doing business. So people don't understand about takaful. So because they don't understand about takaful, they even not care about insurance. Even others take as taboo. I mean, it's something that is dangerous when you have cover. I mean, these people always come after the money. When you have a problem, they will never compensate you. So they have that belief in their mind that insurance is a way of stealing people's money in a smart way. But when we educate these people, understand about takaful, understand about insurance, they can appreciate that is a solution to the future problem. Because we are all vulnerable in one or ways, different ways. If you have a car, you are vulnerable. If you are in Africa, we are in an environment of different tropical diseases, different types of diseases we are facing. So if we don't have cover, means we are facing a problem in future. So because of that, it becomes very difficult for people to understand about the CAFOL. This is some of the challenges we are facing, but because of time, I can't go more. There are many, maybe next time we shall discuss more about them.
Thanks. Let me maybe just make a point there. And thanks, Mohammed. I forgot about one aspect about data, which is you talked about fraud. And I know some of you could have gone through that being point. And I just wanted to allow me.
Yes, absolutely.
Is that one of the biggest benefits coming from technology, using technology, is that aspect of fraud analytics, is that you're able to actually detect something before it happens. So those are some of the areas where we basically protect customers, because you can tell this sort of pattern. For instance, an account is an old account, right? Maybe you are a pensioner, or an account where you know that someone does a transact code open, then all of a sudden there's a very frequent activity which is probably voluminous. So these are indicators of maybe something unusual happening. So quickly you're able to actually arrest it and find out. So it helps you, and these are things that you then automate. So again, technology goes a notch higher. You automate so that it gives you alerts, so that if something is happening, potentially happening, is able to give you alerts. And I think finally is on the issue of even people management, the aspect of HR. Today we cannot be able to basically manage performance, and it is critical, because the sales, it will basically track. You have done sales of X, for example, X number of loans. You have opened 20 accounts. You've probably given 100 cards. So the only way you can be able to manage this performance is using technology. You can't have someone at the back office trying to do all this, and those will now form the broader picture of how technology then complements the services that you offer to customers, in terms of even having access. For instance, you open an account, for example, in Garissa or in Kisumu. You don't have to travel all the way to Kisumu to do your banking. You can do it anywhere, at home, asleep, in Tanzania, in Europe. So those are some of the areas that I just need to touch base on. And thank you, Mohammed and Pat.
Thank you so much. Just a quick one. I'll only take 2 questions because of time. So it's balanced. Lady, gentleman, if you can help me.
George, thank you for your comments, and same with my friend Aladdin. We in Kenya are facing a real risk, and it's no longer perceived. Our debt to revenue ratio is getting very close. We're probably at 70% of that versus total revenue, tax revenue. And I see a lot of banks investing in the government securities. In the event that the government is unable to pay its investors, what assurance or what are the risk mechanisms that the banks have, because they are placing that money in government securities, and so that the depositors' money is protected? Thank you.
So we'll take both questions so that they can respond, and then we can. Just a minute, one last question, and then you.
Thank you, Mohammed and George, for the very good conversations we've had this evening. My question is on culture, organizational culture. I'm a HR consultant, and I'm happy you talked about performance management and the fact that now with technology, we're able to track the numbers. But I have a question for us in this room. As leaders, as business executives, are we maybe indirectly fueling corruption through performance management? I'll give the example you gave us about a salesperson who has a target of 1,000 cards. It's our culture, our internal organizational culture. And by culture, I don't mean what we plaster on the walls, our mission, vision, core values. It is the actions, and especially from the top leadership. Do we walk the talk? Do we tell the salesperson that it's okay not to make the 1,000 bring 999 miss one card if it means the one card will lead to unethical practices. Our reward and recognition programs at the workplace, do they encourage teamwork? Do they encourage gradual progress? Or is it cutthroat competition? Do I want to be employee of the year at whatever cost, just because I read the numbers? I think that's a conversation we should be having at the leadership.
So one last question from the gentleman.
Good afternoon all. My name is Akanles. I just wanted to ask a question from the service industry. The market is competitive. Everywhere is competitive, also the service industry. Sometimes you find some sectors of the industry are going beyond the state limit. Some call it undercutting, others call it favorable terms. Does that point come to an element of unethical partiality, or does this compromise the compliance part of it? I want to know how, either from the insurance industry and from the banking sector, how they are able to deal with the element of compliance from that particular world.
Excellent. So I think you can split or
So I think you can touch on the one from Rajit, but I'm not the best placed person to talk about it. But I'll attempt it because I think it's a critical, it's a good question. Thanks, Rajit. I think that every bank, and I would imagine, but I will speak for ABSA, at least the little is that we have a properly structured treasury management unit that deals with how much you can lend, you can invest in a particular product, and that is based on the capital available to the bank. Yeah, but for every section, for every investment, this is how much is available, and is monitored. So, and that risk in terms of either sovereign investment or and this would actually move from a parameter of concentration risk. Have we invested so much in this product, and therefore we should pull out? So that is the main control, and it's vested in a specific. It is required within prudential guidelines of the Banking Act to ensure that you basically have procedures, governance around, and this is board approved, governance around how much you can invest in any particular portfolio, just to ensure that there is no run on the bank. So that is one. Then I can probably just attempt to, Rajit, I hope I've probably done a bit of justice to your question. That is a key parameter.
We'll have coffee actually.
I was just about to suggest that.
Thank you, Rajit. The next one is by
Joanne.
I think is a very good question, and I think one of the things that in my presentation I forgot to mention is that at ABSA we do sign what you call code of ethics. Every employee. We also do have specific clauses within our terms and conditions as a bank, right? Let's talk about what we do to ensure that we protect you. And also talk about now internally, as part of the conduct, is basically conflict of interest. There's aspects of anti-government corruption. Conflict of interest is you declare any external affiliations. You also have, if it comes to the rewards and performance, it is based on what you bring, and it must be above board, because there are other mechanisms within that governance framework that checks and see. If we did say, for example, you met your KPI, there's an assurance that is checked and see, do they perform after a certain time, or were they mules, or are they basically just meant to meet your KPI? So these are checks that are done to ensure that people don't game the system. Because then it is something that was there, and you recall a few years back, I think 6 years back, there was an issue in the US, JP Morgan and a few other banks, where people were just opening accounts to meet their members, and they would get huge bonuses. But then after even if you go back to the crisis of 2008, the one of mortgages, it is the same thing that happened, that people were getting what we call basically above appetite, very risky behavior. So to avoid that kind of thing, you need to have controls that say, look, you balance the reward and compensation in terms of, yes, this and this happens, but remember, we have these controls to check. And that is again done on a monthly basis through media sampling. And again, there's also basically what is you as a contract between you and the staff member. What is stated there that you sign off. That whatever you bring in meets this criteria. Thank you.
Excellent. So maybe you can attempt to respond to the last question.
Yes, yes. Even I can add for
Yes.
question. Yes. From the Sharia perspective, fairness is also critical. It's important to ensure that we have that fairness. For example, let's say those good performer or best performer are always rewarded. You must reward them. But there's normal rewards for everybody, for every effort, even if it's a little, it has to be rewarded. For example, let's say if the company has performed well, so when it comes to salary increment or bonus, cut across, everybody has to receive, because it is a collective effort for every staff member who has performed well. But let's say for those business team who have gone beyond their effort to ensure that the company has performed well, those always, are highly rewarded. Even when we know very well that before God in the heaven, we know will not be at the same level. Others will be at the higher level. Why? Because of the effort. They did much good deeds on earth to please God. So the same concept, the same principle applies. Comes to my friend Calvin's question. I know there's an undercut, upcut, I don't know how to call them. It happened because we want to promote, but what I encourage always, stick to the Sharia principle, stick to the ethical aspect. Because remember that we have that Sharia principle that when you do things as per the Sharia board, God's power, God's hand is on you. It's on your business, watching, guiding, protecting, even helping you to achieve your target. So stick to that and you'll prosper. Thanks.
Wow. Anything you want to add? So I would want us to really appreciate our panel. Not the way the moderator was doing. No, we're changing it. We're changing it because they've given us so much wisdom and they've given us insights that it not necessarily in a bank that we can apply in our own businesses. Because it's about systems, it's about processes, it's about managing people as well. So that cuts across, and how we can also leverage on technology. So we are going to do the 5 factorial. Thank you very much. George and Mohammed are still around. If you have any questions that you have for them, please reach out. And I think there's a Takaful desk, so for all of you that want to open accounts and get your insurance covered, there's a beautiful lady out there that's manning the desk. She's going to give us that information. Asanteni sana.